evening, traders from across the globe, and welcome to the 881st edition of Short-Term Trading Live with Oscar, the educational trading YouTube videos. Traders, I am Oscar Carboni, and I have been practicing and working on technical analysis my whole entire adult life. This is my 30th year professionally in this business, and I'm still standing. As we all know, futures trading can be extremely risky and cause substantial financial loss. It is not suitable for all trading accounts, and if you don't recognize that a stop is your best friend and you do not place your stops first, you probably shouldn't be trading futures. But for you cowboys that understand this game, rock and roll, you know the risks. Let's get moving. Traders, this video is being filmed on Monday night for Trading Tuesday, June 19th, 2012. And right off the bat, hooray, 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 a green Omni on the board. Go green Omni. I gotta love those green Omnis. Why do we have a green Omni? Well, the inverted head and shoulders that we have seen in the NASDAQ, the S&P, the tranny, the Dow, you name it, is working as expected. Those repetitive patterns are now giving us the bullish move that we thought they would give us. That is what inverted head and shoulders are known for, and repetitive patterns is what I teach you constantly. This game is completely wrapped around the whole idea behind the art of technical analysis is spotting repetitive patterns. That's what we have. That's what we've spotted. We've been working on it for days and days on end, video after video, showing you that nice inverted head and shoulders, that it would be bullish, and so far it has been. So that is what we've been looking at. And in this video tonight, we're also going to talk about soybeans because we have to keep a close eye on soybeans. They have been now 3 closes below a very important Omni average, and that can be quite meaningful, and I'll show you that as this video progresses this evening. Traders, what's going on? Well, as you know, I love to read the newspapers over the weekends. I read everything I can get my hands on, and over this weekend, of course, I read a lot of things. One of them extremely important, right here in the Wall Street Journal. It's a big article about blue chips hit a double triple, meaning 2 days in a row where the blue chip stocks of the stock market rallies and settles up over 100 points. You want to know what this says? Why have traders like you out there, why has most of the street had difficulty in these last few months trading? As you've heard me profess, these markets do not seem to go anywhere in one direction before turning and going in the other. Before you can get warmed up lately in one direction, it flips and goes in the other. That is what I've been telling you for the last few weeks. Why, if it's confusing to you, you can't completely blame yourselves. Granted, lately we're starting to trend a little, thank goodness. But traders, in this article, blue chips hit a double triple. You know what it says? Imagine this. On Thursday and Friday, the blue chip stock settled both days up over 100 points, or a triple-digit gain back-to-back, 2 days in a row. That marked the first back-to-back triple-digit gain for the blue chip stocks since November. Since November last year, this is the first time we've had 2 days together in a row that are over 100 points. Could you imagine? You better believe it's been difficult to trade. It is not completely your faults out there. When you have a market that will go nowhere, I mean, could you imagine what this stat really states? Since November of last year, you and I have not seen 2 days in a row where the stock market went up 100 points 2 days in a row. Of course it's been difficult to trade. Traders, try to stay calm. We'll get through this period. But I just wanted you to know that if you've had trouble lately, there's most likely a reason why the market goes nowhere in one direction lately. Then there's this. Election time again around the world. Here's a picture of the elections. When I look at this, traders, I can only say one thing. I pledge allegiance to the flag of the United States of America. Could you imagine this being the look on your face the day that you get to go vote? Wow, what is wrong with this world? Thank you for being an American. All right, enough of that. Traders, here we go. We want to keep a close eye on soybeans because it has settled, closed 3 times in a row below a very key omni average, and the inverted head and shoulders is working as expected. Traders, if you like the analysis that you are about to see in this video, in this chart segment, come on down to livewithoscar.com, and if you'd like to speak to me about anything that we're talking about in these videos, ask me the question right here on this video down below, and I'll be more than happy to come back and answer it for you. With no further ado, let's go look at some charts. Okay, traders, the first chart I will show you this evening is a chart of the July soybeans daily bar chart. Traders, look at this. This is the July soybeans, the way it moves up and down, right? Each green bar represents 1 day's worth of trading. This is a very important omni average. Here's what's interesting. When the market, the soybean market, gets involved with the omni average down low and gets above it, it seems to be a buy. When it gets involved with the omni average up high, it gets below it and seems to be a short. Look at how high we were last time we broke under the omni average. Look at where we are now. 3 settlements below. We settled 3 times below this average right here. 1, 2, 3, then the crack comes. We settled 1, 2, 3 times below this average as of the close on Monday. We do expect the crack to come, at least using repetitive patterns. Remember, when you get involved with the omni average down low on your chart, you get above it. When you get involved with the omni average really high on the chart, you get below it and you start to break. 3 settlements below the average, 3 settlements below the average, up real high as they cross the market and the average, up real high as we cross the market and the average. That is a repetitive pattern, so we're expecting some downside in the soybeans. Traders, we do expect a bit of a rally first. We are selling into a rally. Selling a rally. We are not selling it out of the hole. We are selling it if it rallies up a good 15, 20 points. Somewhere on a big rally, we're going to look to go short. That's your soybeans. Traders, for trading on Tuesday, Dow Jones Industrial Average Daily Bar Chart. How many of you have seen this chart in video after video? At least the last 4 videos, this chart has been in front of your eyes. The Dow Jones Industrial Average Daily Bar Chart. The purpose of me showing you this chart was to prove to you once again and teach you the fact that the cornerstone to accurate technical analysis is repetitive pattern recognition. Here we are with an inverted head and shoulders at the 200 bar moving average. The next thing is this big blue upward channel fills in, or you get a breakout to the upside coming out of the inverted head and shoulders. Then we put in another one right here, shoulder, head, shoulder. I draw in this empty blue channel and it begins to immediately fill in. 3 bars already filled in, doing exactly what you're seeing here, moving us higher, just like you're seeing here. Repetitive patterns are absolutely the cornerstone to accurate technical analysis. So that's your Dow Jones Industrial Average, traders. Look at the Dow Jones Transportation Average. 1 inverted head and shoulders, big rally. 2nd inverted head and shoulders gives us a big fat rally the next day when it breaks out, and it stays up here for quite some time. Another inverted head and shoulders, look right into this channel. Here we are now, filling in very nicely like it did here, like it did here, like we expect it to do here. So that's your leader, the transportation average of U.S. indices. Let's look at another chart. Traders, the Russell 2000, shoulder, head, shoulder, inverted bullish head and shoulders. What is it doing? Filling in immediately into that empty parallel channel. The one with the question marks we had for the last 5 or 6 days in our videos, showing you that we expected the up move, and we are starting to get that up move. Now, we do not want to fall in love with the upside or the downside, because I just read a stat to you that we've not had 2 triple-digit gains in a row stacked together since November of last year. So this can easily turn after having a few days up, but we are day traders, and for now it is pointing higher. So at the onset of Trading Tuesday, we are looking for the upside. NASDAQ, inverted head and shoulders, holds the 200 bar moving average, a very important average out there on the street. Shoulder, head, shoulder is now filling in the empty blue parallel channel. If you recall, I've said this to you for a week straight, maybe longer. We simply cannot discount what we see on all of these charts. There it is, traders. You cannot discount a bullish inverted head and shoulders, and we are getting the move out of it. Then if you look at the MACD, moving average convergence divergence, a very powerful long-term indicator. It is pointing straight up in all of the U.S. indices, pointing up at least for one more day, Tuesday, for trading the U.S. indices, at least at the onset of trading on Tuesday. Then we look at the S&P, the one we love to trade so much, traders. Shoulder, head, shoulder, look at that, filling in this empty parallel channel that we had placed on this chart a few days ago. So far, the inverted head and shoulders formation is working exactly as expected. Go technical analysis, you cannot ask for more than that. So traders, there is a look at the technical picture of why we have the green OMNI in U.S. indices, and why we need to watch the soybeans. Remember, those three closes below the OMNI average was very significant last time, so we have to watch that. We have three closes now. Traders, the other thing I mentioned to you is that, do you not realize how serious it is to recognize the stat? Since November, we have not had 2 days in a row that you can count 100 points in the S&P, or the Dow, I should say, back to back. We used to have days like that constantly. It's called a trend. Remember those days? Do you know why it's been this way? I have been on a campaign. I've asked many of you OMNIX to help me. I've been trying to get these senators to listen up. You know what? We've had Jamie Dimon trying as well. Whoever out there that makes any sense at all that can somehow speak to these senators, here's what needs to be done. Repeal the Volcker rule. Rewrite the Dodd-Frank Act. Look, the Dodd-Frank Act. Listen, not so many things in it are wrong, but the reason why we do not have back-to-back triple digits any longer is because these rules have chased out our banks from prop trading, and prop trading was the meat and the liquidity behind our markets. You must have noticed lately, you get into a market, you got a few minutes to make profit, you don't take that profit, it is gone. That is not the way it's been for the last, I don't know, 25, 30 years. You've been able to play this game. Now you get in this game, there is zero liquidity. Traders, do you know that more than midday, we were towards the end of the day on Monday, I don't think volume was more than 350 million shares. I mean, a billion shares. Seriously? 350 million shares was about all that we had almost towards the end of the day on a rally day? What does that tell you? The meat and potatoes is no longer participating. The middlemen, the market makers, the liquidity providers have been told by these guys who don't trade, but decided to make rules about trading 2009 no less, when the world was going like this. Oh my God, what do we do? It's the end of the world. These guys decided to act then, and what they thought of then they think is right. Sorry. You were acting at a moment where you were under complete stress and duress. You thought you were doing the right thing. Look at what you've done to our markets. We have a skeleton of what used to be. Dodd-Frank, please do something about that. The Volcker rule needs to be repealed as far as having banks not prop trade. Traders, I've been doing this for 30 years. I assure you of this. The liquidity drain that we've seen is directly involved and related to these two things right here. The more the banks run for cover knowing they can't be prop traders, the less liquidity you and I have to deal with. The more we're just picking each other's pockets. It runs up towards the end of the day, it smashes back down. No one knows what's going to come next. Then you have the high-frequency traders, and they're going, hey, there's nobody to stop this. Bing, bang, bing, bang. They're just flipping those orders out there. No prop trader banks to go, oh, yeah? Sold that 2,000 lots. There's no one there to do that anymore, right? So it's me and you. That's not going to work, traders. Again, I will repeat, if they do not do something about the Volcker rule, stopping the liquidity, it was wrong. It was a political move. It was not the smartest thing to do for us traders. If you cannot do something about that, these markets get thinner and more people get scared away. That is not what we built these markets for. It is not what they were built around. You are not supposed to create a market that people cannot trade. You are supposed to help create a market that is safe for people to trade, that has plenty of liquidity in market makers, that huge funds can just come in and out and not even be noticed on the way out the door. No longer do we have that now that we have this. Maybe you traders out there can help me. I don't know. Until then, we will just continue to do what we do with the Omni. But remember, you need to hit and run. There's no more sticking around in positions all day. You hit, you run, and you stay there hiding for cover until the next hit and run comes. That's what we're left with until the liquidity comes back. Traders, I hope you come join me at livewithoscar.com. Jump into my free trading rooms and don't trade alone. Allow me to help you understand the chart analysis the way I've learned it over my 30 years. Traders, I hope to see you at the site. Remember, any questions, just simply write them down below this video and I'll be back to answer them for you. Remember this. Always try to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this motto to yourselves over and over and over again. And you know what that is. Stops are in. Emotions are out. Yeah. Thank you for coming, and don't forget, repetitive patterns are still the best way to figure out where this market goes next. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.